Hi, welcome back. What I'd like to do now is go into our third and last video and talk to you a little bit. We're going to now get into the numbers as I promised you. But let's recap. If you remember in the first video, we talked a little bit about me. We talked about what a normal client looks like, sample program, the tax advantages, and then I went over a list of the frequently asked questions. Now it's time to go through some case studies, and what I want to do now is we're going to go through some case studies and hopefully show you in here some cases that you might be close to. Because we're going to go from a $200,000 CPA all the way up to a business owner that had a $4.5 million tax deduction. And what you'll find in there, there's somewhere you're going to fall that you will see and can calculate roughly what your tax savings would be. First person we met with was a CPA. We told him that we had the programs available, and he said, can you come meet with me and a couple of my clients that I would like to see the deal. What we found out was he had known about the deals, he had seen and used them on some of his clients, but he had no way to access to the program until I contacted him. So we came in, and when we did the program and showed it to a couple of his high income earner clients, is that we decided, said, hey, I love this deal. Income is in excess of $200,000, and I'm going to owe $50,000 in taxes, and so I'd like to do the program. So when he did the program, basically saved about estimated $11,000 in taxes, which we basically just, in talking with him, just added to his retirement plan. Case study number 2 is an attorney, rough income of about $500,000, federal and state liability about $170,000, and so we met with him. He had attended one of our workshops, and from there we met with him. He was going to owe $170,000 in taxes. We were able to save him $47,000 he put back in his pocket. Now what I wanted to do was put it in his retirement plan, but we lost out because they're now getting a new remodel kitchen and bathroom. In that case study number 3, what we have here is we have a gentleman that owns several businesses, and he sold one of them and had a net taxable income of $4.5 million, and he was going to owe in federal and state a tax liability of about $1.9 million. In here, he was going to have a tax liability, like I said, of $1.9 million, and what we did was we ran him through our program, and we ended up saving him about $570,000 in taxes. And what we ended up doing, he took part of the money, put it back in his business, and ended up buying a second home. Now, remember I gave you some homework, and the homework was to pull your 1040 form. So now what I want to do is go over this 1040 form with you. So what I want you to do is pull out the 1040 form, and we're going to talk about it for a few minutes and how we use the form. Right here, we're going to go to, remember in there we talked about in the beginning of the tax codes that you're allowed to take a 50% of tax deduction of what's called adjusted gross income. That is line 37 on your tax return. Take a second, look down there, and get that number. Now, and we'll talk about that a little bit more in a second. Now, the next number that you can do is that we now need what's your taxable, net taxable. Because if you look above this line, as you can see, that's where all your deductions came in. And so now what we have is what is my taxable income after all my deductions. And from here, if you're doing your tax, and this is doing your tax return, you would now take this number, go to the tax table, and you would now calculate how much money you have to send to IRS. So those are the numbers that we need. So I need to have those with you. Now what I'd like to do is go over our tax calculator. And what we do with the tax calculator is to look at your income, line 37, line 43. We plug those numbers in, the state income tax, and we go down through it, and then it will tell us if this program that we have is worth your time. So I want to go over this form with you and help explain and pull in all the conversations that we've had and all the stuff for the last couple of videos. In here on line 37, let's assume that your income is $700,000. That is your adjusted gross income. Now we go to the next line in our system is that we're going to assume that you had $50,000 worth of deductions. In here, you now have a net taxable of $650,000. In here we have 6% state. So roughly estimate is that you're going to have a taxable income of around $240,000. Now, what we don't know here is how much money that you have given to, let's say, a church or a charity. So if you come in here and you have given X amount of dollars, let's say you have given $50,000 to a charity, well then that goes into the calculation of 50% of your allowable deduction. But for this conversation, we're just going to assume that you made no church contributions to make it easier. Here, what happens, you have that. Now what we do is, if you remember that your income was $700,000 adjusted gross, and if you remember what IRS told us, we are allowed to take up to 50% of the adjusted gross income as a tax deduction. Again, we're going to assume no church contributions at all. So in here, if you remember, we now have a $350,000 deduction that we can use. If you remember, I showed you in the first video that by being a member of the partnership, then what happens is that you are allowed a 4.4 to 1 allocation of dollars that you invest. Well, we need to see now how many dollars do we need to invest in the land conservation easement program so as to create $350,000 of deduction. As you can see right here, that number is $79,549. If we invest that into the land conservation program, multiply that times 4.4, that creates your $350,000 deduction. In here, you had a taxable income, remember, of $650,000. I just created for you a $350,000 tax deduction. So now if I subtract the $350,000 tax deduction from the $650,000 of net taxable income, now instead of your income being $650,000, your net taxable income is $300,000. Now, we run through the same calculator that we did before on IRS's calculator. So on $300,000, instead of owing $242,000, you only owe $92,000. What I need to do is recap this for you so as that it sort of brings it full circle from all the things that we've talked about. Now, if you had not met us and you had done what you've been doing with no other tax planning, you would be writing a check to the IRS for $240,000, period. Now, since you have met us, and if you remember on the slides I've shown you before, is you now don't owe $243,000. Basically what happens is you only owe $92,000. And that $92,000 is all you would owe the IRS. But if you remember, I created a $350,000 tax deduction for you. Remember, that was 4.4 to 1. So we have to invest in the land deal a total of $79,549. Now, if I take all of that and I subtract those two numbers to the 242 again that you were going to send to IRS, I want you to understand this. You're not writing any other money. This is not coming out of your pocket. This comes out of money that you are going to send off to Washington. You please have to understand that. So for that, the bottom line is we put at $700,000 income, you would have put $70,000 back into your checking account or back into your retirement plan, back into your business, whatever you need to do. That's how the program worked. Now, as you see right here, we've saved you over $70,000 in taxes. But I'm not your CPA. I'm not an accountant. I'm 37 years in this business doing financial planning, working with people like you, high income earners, with a focus on tax planning. Now, what I know, and most of the clients that I deal with, is that I usually end up talking to their CPA, or I have our CPA talk to your CPA, or the CPA will say, hey, could they come in, and I have a lot more detailed questions. We'll come in and meet with the CPA and answer all the questions. Last time I did this, I went into a small firm and they had 7 CPAs sitting at the table, and we were getting a flow of referrals from them starting last year. That's what we want to do. We want to do whatever it takes to make you comfortable in looking and getting involved in this and getting involved in some tax planning that I'm pretty sure that you're not familiar with. But as you can see, I hope that I've done my job and educated you in these type of programs, how they work, and what the benefit is. Now, I would really like to do this for you. I would love to have the opportunity to talk with you. The next step is, remember, gather your 1040 form. You've already got that, so we need that. Then what I want you to do is below there'll be an attached form. And in that attached form, you're going to go in there. One, always give us any questions, but also in there, there's going to be a form that asks for your line 37 and line 43 numbers. And then your contact information. Once you send that back to us, then once we have that, then what we will do is then my assistant will send you my calendar. And he will send you a link that lets you go right into my calendar, and you pick a day, again, Monday through Friday, that you want to talk and the time that's convenient for you. So I really hope that you've enjoyed this little small mini course on tax planning strategies. I hope that you see the benefit. And the last thing is, I really hope I get a chance to help you with your tax planning. Again, don't forget the form down there at the bottom. Please click it, fill it out, and send it to us. Until I talk to you again, thank you again for taking your time.